what we're seeing is an explosion of countries now launching carbon markets off the success in Europe. So today we're invested in 5 carbon markets. Europe, of course, the UK has its own carbon market because of Brexit. There's 2 carbon markets in the US, as you know, California, which is linked with Quebec and Canada. I'm a Canadian. Oregon and Washington State are both moving legislation through to join the California market. So that's interesting. So is New Mexico is making some rumblings. On the East Coast, of course, you have the regional greenhouse gas carbon market. That's 11 US states. New Jersey joined last year, Virginia joined this year, and Pennsylvania is scheduled to join next year, and North Carolina is now making some noises about joining. So really interesting to see these markets growing. Globally, just to touch on what's happening though, is the amazing development of carbon market. China has launched their carbon market in the summer, covering 5 billion tons of emissions. So that is really big news for climate change. Korea's been running their carbon market since 2015. We're invested in the New Zealand market. We really like the New Zealand market. Mexico has a big carbon market. They're in their pilot phase. Brazil, even with Bolsonaro in Brazil, they're now moving legislation through both houses in Brazil to launch a national carbon market. And 5 weeks ago, Malaysia, the country of Malaysia, announced they're launching a national carbon market. There's another dozen countries that are looking at this. So we're probably in the first or second inning on carbon. When I began to look at it 3 years ago, we were trading about $500 million per day. Now we're trading 3 or 4 billion per day. And I think very soon we'll be trading in excess of 10 billion per day. And many are saying we will overtake crude oil in the next 10 or 20 years. But what we all hope for is we hope that we have eventually these markets linked. So Switzerland had its own separate carbon market, but then last year it linked with the European carbon market. And what we'd like to see is we want one global carbon price where all the markets eventually link. Because again, it comes back to the efficiency of least cost abatement. It's probably cheaper to abate emissions in Africa or in some Asian countries than it is in highly developed Western economies. So linking these markets makes sense, but obviously there's a lot of political issues. So I think we're probably a decade away from linking all the carbon markets. But you're right. I mean, if China lowers their emissions on their carbon market by 2% per year, that's 100 million tons per year, that's the entire emissions of the United Kingdom being taken out every year. So this is one of the few policies that has the ability to move the needle for the Paris Agreement, I believe. Carbon, most of the carbon trading that is done today is done through exchange listed futures and options. So on the Intercontinental Exchange, which owns the New York Stock Exchange, of course, they have listed futures and options. If you buy the futures contract and hold it to expiry, you get delivered the physical permits, just like if you hold oil or you hold wheat.
So our listeners know it as ICE.
Yes, exactly.
Savvy guys, ICE. But go ahead, yeah.
Okay, yeah. So yeah, for people that are savvy, yeah, it's ICE futures Europe and ICE futures in the US. So that's where the contracts trade, as well as the options market. One interesting thing is that a carbon permit in California, you can't bring it to Europe and give it to the regulator in France to meet. So there's no cross fungibility or direct arbitrage capability. So the markets are priced quite differently in terms of the price per ton, even though it's the same 1 ton of CO2, same commodity, but it means there's also very low cross correlation. And in fact, that's one of the things we leverage on in our global carbon fund. By diversifying across multiple carbon markets with low correlation, we achieve a lower risk profile.